Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey trading friends, checking in on KODK, what everybody's talking about today. First off, want to highlight how 2 days ago we had an 800% increase on the 20-day, I should say over the 20-day average volume, letting us know that there were absolutely insiders trading on information, and there are absolutely people that have 6, 7, and probably 8 figures more than they did 3 days ago because they are cheating and breaking the law, and that is just part of this game, but it's happening on a daily basis, and it's blatantly obvious in this kind of example. Did everybody that bought that day have inside information and cheat? No, but a lot of people did. Absolutely no doubt whatsoever in my mind. So today we have the huge gap up open, and the move this morning is just a glaring advertisement for the stock market having no basis in reality in certain scenarios, and us seeing the market cap go up in the last few days an insane amount based on a low supply of shares, a huge demand for shares, and we were at a point where we were seeing $6 moves up in 15 seconds. We would halt for 5 minutes, and then we would open again and go $6 higher and halt, so on and so forth. So my trading style, I've said this many times, but for those who maybe haven't heard it, my trading style 10 years into my career, I very clearly know as a day trader doing this on a daily basis, the kinds of setups that I like, the kinds of setups that make me money consistently, and the kinds of setups that don't. So I avoid the ones that don't, and I focus on the ones that do. The setups that make me money consistently as a day trader are anticipated equilibriums, which KODK did give us. I'll go over that in just a second. Breaks of equilibriums, oversold bounces, and blue sky breakout FOMO. Not in this instance. I like when a sector does it. I like when the cryptocurrency space does it in 2017. I like when the Canadian MJ space does it in 2018, and that's when an entire sector is doing it over days and weeks, not just over 1 hour. It's a very different scenario. I anticipate that that's going to happen again with US marijuana stocks eventually, but it's the kind of scenario that comes along once every few years. So for day trading on a day-to-day basis, anticipated equilibriums, breaks of equilibriums, and oversold bounces. Those are my plays as a trader. So I see this move and this breakout, and I want nothing to do with it. It's going to halt every 15 seconds. There is no control of the trade. And you know that because we're going up so fast that there is no support being established on the way up. And as soon as the music stops in the game of musical chairs, we're going to drop really hard and really fast, which we ended up doing to the tune of 56% in just a few minutes of trading. These are 5-minute candles, but it was not 20 minutes of trading that got us down to that point because, again, it would open for 15, 20 seconds and halt. And there are a lot of people that lost money on KODK. There's a lot of people that made money, so congrats to those of you who did. But my point is, I skip this, not caring about it at all, and then as soon as I see the setup that I am familiar with, I start trading it. As soon as I saw this big drop, I say, well, we're looking for a 5-minute higher low compared to 1750. I took a small nibble on the second to last halt, and I placed a small order. And one point I want to make is, if I'm used to stocks that are moving 2, 4, 6%, and then we see a move like this, I must adjust my position size to adjust the risk and reward I am exposing myself to. So what I mean by that is, let's say Tesla, which I have been day trading all 2020, that's my stock of 2020 in both directions, and let's say a 6% move on Tesla forming an equilibrium, which it did today. Look at Tesla on the 5-minute time frame this morning. Perfect equilibrium. High, low, lower, high, higher, low, lower, high, higher, low. There's your bull break. Solid little follow through. There's your day maker right there playing that 5-minute equilibrium breaking. I didn't because I was focused on KODK at that point. But my point is those equilibriums are everywhere. But let's say that I'm used to a 6% range on Tesla. So let's say I were going to trade $300,000 on Tesla. Let's use an easy number. $100,000 on Tesla, a position size of $100,000, and taking advantage of that volatility. So $100,000 with 6% range. If I want to match that risk and reward on KODK, let's say KODK's 6% range is instead a 30% range. It was even more than that. But if it were a 30% range, I would need to use 20% of the capital because 6% on Tesla is 20% of 30% move on KODK, so I have to use 20% of the capital to have the same exposure. If I use the same dollar position, $100,000 on KODK as I do on Tesla, I am potentially putting myself at risk of giving back a month's worth of profit if a trade goes wrong, or if I don't honor a stop loss, or if I make a mistake. I want my mistakes to be small steps back. Every mistake that I make as a trader and come up with a loss, I want it to be easily overcome with just one day of trading. Well, I can make that loss back in one day, no biggie. And that is the way to keep your losers small and just stay in this game long term, just putting one foot in front of the other consistently. So I ended up, another point that I want to make is knowing when to stop. A lot of people ask me questions, do I stop after I hit my day's goal? Do I stop after first loss of the day? And essentially, you don't want to limit yourself because some days there's way more opportunity than others. But I'll give an analogy, which I've given before, but I'll expand on it a little bit with basketball. But first things first, I ended up playing a small bounce looking for the 5-minute high or low. I exited at 36. I knew a 5-minute lower high was the most likely scenario on a bounce here. We set that lower high. I then look for the higher low and need to pull up my chat here. So here's the chat room. This is a lot easier. So I can say 5-minute lower high set at 41.20. I am a buyer on a $30 break with a stop under 26. So at that point in time, it was right here. 41.20 is our 5-minute lower high. I'm a buyer on a $30 break with my stop under 26. So what I am doing there is establishing my trade game plan where my risk will be less than $4 and my potential reward, even knowing that a 5-minute lower high is most likely, will be potentially that much, if not more. In the end, it ended up only being about $6 or so, but that was another successful trade, just entering as soon as $30 broke and then selling in the low $30 range, knowing a 5-minute lower high is most likely. And here we are in a very clear tightening range that is going to break sometime in the next 30 minutes, and we will see a volume spike associated with that break. The most important short-term support for me is 30.53. That's the lowest price we've seen in about an hour. And we have resistance at 35 and 34.79. So if we zoom into the 2-minute time frame, I can see that is the most important resistance. Bulls can be looking to potentially buy a break of that level, keeping in mind that I myself, as a more conservative trader, if I buy a bull break of 35, I'm going to be selling half of that position and locking in gains real quick to lower my break even and be in control of the trade. The last thing I want to do is be in a position, break 35, don't get follow through, and now I'm in a red trade wondering where I should put my stop loss. The key support, again, 30.53. We can see we've just been trading in this sideways range for this amount of time. This is the 2-minute time frame now, and we're just waiting for a break of this range to dictate short-term direction. So the point I want to reiterate back with the analogy of basketball is I ended up with a 2-day maker on the initial bounce, a half-day maker on this bounce, and then I did try one more trade, and I had a half-day loser. So at that point, I have 2 wins. Things are going good, solid day. 1 loss, only gave back 20% of my profit on the day. That's great, small loss compared to the winners. I'm now sitting on a 2-day maker. I'm calling a timeout. I'm done trading KODK for now. So what that does, the analogy with basketball is essentially, let's say it's the 4th quarter, things are going well, I'm up 12 points. The opposing team just scored 5 points in a row. I call a timeout, and I'm not going to allow the other team to come back into it. So I am very much a big believer in flow and momentum, and as soon as I break my winning streak, I do not want to then get into a losing streak. So a lot of traders, newer traders, don't know when to stop trading. They'll have a big win, and then they will overtrade giving that back. So even if this setup, which is crystal clear, even if it breaks $35, again, if I'm a more conservative trader and I'm trying to make some big gains this month, then I'm going to keep trading this setup. But again, if I'm looking 10 years out and I want to just do this every day and have my small winners and be good to go and hit all my monetary goals, 2-day maker, 1 loss in my most recent trade, I'm done. And I'm not giving back any of that profit. I'm going to end today with that 2-day maker. Maybe I'll make a trade based off the FOMC and the S&P 500 later, but if I do, it'll be very small risk. And that is the way that I approach trading with a long-term mindset. And I don't want to ever give back. I don't want to ever go back from a multiple day maker to break even or even in the red. I will never allow that to happen. I will always close the computer and stop trading and shut it down. And that's the discipline that we need to not constantly give back our gains. You'll find a lot of traders, myself included, will make solid wins in the first 2 hours of the day and then give it back in the afternoon. And I recognized that pattern in myself years ago, so I just stopped trading in the afternoon. Recognize what works, keep doing it. Recognize what does not work, cut it from your strategy. Here comes a resistance attempt. So let's just paper trade. Let's say I've got a stop buy order of $34.99. Why am I using that level? Because if we break $34.79, technically that's the bull break signal, but we have to break 35 for it to follow through. And if I put my stop buy at $34.99, my shares will likely fill at 35, as I'm assuming that round psychological number has a decent bit of shares on it. And if I wait till after the break of 35, my fill could be, 35.20, 35.30, potentially even up to 1% higher. So I'm not going to sit here and watch this whole thing, as it looks like we may tighten up a bit more, but let's just say hypothetical, stop by $34.99, and I would then look to sell half of my position on a $1 move up, which would drop my break-even price to 34 and give me a little bit more control. Hope you have a good trading day. Protect your positions, whatever direction they are here in KODK. And keep in mind that we are going to see volatility in this name. We'll probably see a daily inside bar tomorrow, but it's still going to have very significant volatility on a daily basis for at least another week plus. So if you like that volatility as a day trader, you know to be focusing on KODK on a daily basis for at least the rest of this week, if not longer. There's the break, so I would have been triggered in right now. Sell half. So my break even right now is 34s. I'm up 10% on my half position, and I can either hope for a break of 41.20, or I can just exit with what would be, let's see, if the position size that I used earlier, I would be looking at about a day maker right now. Let's see, 34. No, not a day maker. It would be, oh, we just halted. So it would be, I would be at a half day maker right now. So I'd probably let this ride longer, and I'd see if we could break 41.20. And once we unhalt here, it's entirely possible that 41.20 is going to be coming right up. So now that we broke the 5-minute equilibrium bullish, what do? I zoom out, and I look for a 15-minute, potential 15-minute lower high compared to 41.20. Because if we don't break 41.20, we now have a 15-minute equilibrium. It's a 5-minute equilibrium straight into a 15-minute equilibrium. If the bulls do break 41.20, I zoom out even further. Let's go to the half hour. And I'd be watching for a half-hour lower high compared to $60. Lots of space where that could happen. But there's very little resistance after 41.20, so bulls certainly want to see that level break. Best of luck.